it enables you to do multiple things like invest in other businesses, acquire other businesses, or improve your own business. And that's huge. Hi, welcome to the Red to Black podcast. Here, you will learn how to invest in highly profitable private businesses to create abundant financial freedom. If this topic interests you, we invite you to subscribe to our channel. This podcast is hosted by Werner Minchel, ex-Marine aviator and current real estate investor, and Mario Parzino, current Marine infantry officer and business investor. Versus the other business. So let's go to cash flow from investing. Can you break that down for us, Mario?
Yeah, cash flow from investing is really important when you're looking at an insurance business. If you're into any type of business that is generating a lot of temporary float, like insurance, they're taking in other people's money that they're eventually going to pay back. So they're taking in these premiums every month. Just think car insurance. They're taking in $35, $55, $75 a month to insure people's cars. And eventually they're going to pay that back out in an accident, maybe 5-10 years from now. But in the meantime, if they've done their due diligence or they've done the right actuary tables correctly, if they've priced risk correctly, they get to hold that money for a period of time, 5, 10, 15, 20 years until they pay it out in a claim. That's considered float. Now, they should be generating money off that money that they're holding. So one of their favorite activities to do, which will show up on cash from investing, is buy multifamily real estate. So they'll go to Austin, Texas and buy 500 units. So they've taken that cash that they're collecting up, $35 at a time, they're deploying it into a huge multifamily property, and then they're getting income off of that property every month on the rents. And hopefully that's generating a lot more money that they're going to pay out eventually. So when it comes time to actually pay out, they've got plenty of cash available. They've got all these rental units that they can pay off those claims. So that's where you should see a lot of cash flow from investing in those type of businesses, because it's healthy for those type of businesses. Now, a car business like Tesla, if Tesla is making a bunch of money off of gambling on Bitcoin and it shows up as cash flow from investing, it's not as positive, because the underlying business is building cars or battery terminals or battery technology. That's what you kind of want to see. You want to see a lot of operating income. If you're seeing a ton of money, they're making almost no money selling cars, but they're making a bunch trading digital currencies. You're kind of suspect about how good they are at their underlying business, which is building cars. So that's kind of my initial thought on cash flow from investing. Over to you, Warner.
Yeah, great thoughts. So cash flow from investing, in terms of let's look at Oracle's financial statement. There's sort of three areas, and you covered some of them. And what they all point to, before I go into them, is what you said, is when you have a lot of cash, you have the opportunity to take that cash and go out with it and invest it somewhere else. That's what cash flow investing is telling us. So the cash flow statement's like this waterfall down. Cash comes into the coffers, tells you, okay, I got 30% margins. Then, okay, now I have all this cash. Well, I just don't want to sit on it as a business. So where am I going to invest it? Looking at Oracle's statement, you can invest in marketable securities. So like you said, looking for a similar business as yours that's a viable business, maybe another database company or whatever marketable securities works for your business. Maybe it pays a dividend, whatever your investment goals are. You have that cash to make that investment. Then there's acquisitions, number two. So securities, number one, acquisitions, number two. And you're doing stuff like buying buildings, or maybe you're buying another plant, or maybe you're buying another business. In all of these things that are adding to your business. And then number three is your capital expenditures. You're taking that money and you're re-improving, battle hardening your own business. And that's what the cash enables you to do. It gives you, like you said before, we're hammering this point home, because when you have more cash, it enables you to do multiple things like invest in other businesses, acquire other businesses, or improve your own business. And that's huge. If you're in the oil business, you're like, hey, we're just going to patch this pipe over here so it doesn't bust, but we don't have the funds to do this. And then 5 months later, there's a huge bust in your oil pipe, and now you're managing that risk. It's just multiple headaches after another in that business. If you think about the logistical supply line of moving oil from Wyoming, say down to Texas, to the ports in Texas, and then out internationally on a boat, getting across a massive sea to another country. Can you imagine the logistical nightmare that is versus Oracle, where a bank says, "Yeah, I'm gonna buy your software as a service. I'm gonna use that CRM system you have. I'm gonna put all my bank information there. You guys secure it." And that's literally a phone call and a bunch of guys in the back end literally setting it up. It's set up and then it runs smoothly from here on out. Those are two completely different businesses, and you can see that one business sticks around for a while and another business just is literally refinancing, getting more bonds, reissuing more stock. It's just literally, it's like literally just a nightmare to stay afloat because they're constantly searching for cash, whereas Oracle is constantly making cash. That's the differentiating point I really want our listeners to know. What are your thoughts on that, Mario?
Good points, Warner. There's just better businesses. The oil business, I call it the rusty pipe business. It's just constantly needing it's constantly needing money that isn't going to generate you more money. It's just patching what you already have. It's just fixing the rusty pipes. It's fixing the machinery. Like all your profits are tied up in depreciating assets. It's a rusty pipeline. And if you're doing everything perfectly, you're squeaking out a little profit. Oracle, that beautiful Oracle font, spinning up servers and providing a wonderful digital service. It's really a fancy storage business. It's just like public storage. People move their stuff in there. They move their digital storage material or their physical storage material into this building, and they're like, I'm going to pay the monthly cost. And there's a high switching cost if you want to jump over to Amazon or SPA or SAP or IBM, et cetera. There's a huge amount of money and time that's going to take you to basically get the same service. So they're just like, I'm happy. I'm going to stick with Oracle. And they're able to ride out storms so much better than an oil business. Boy, when oil crashes, Warner, what happens to all the toys in Gillette? What happens to all the new trucks and the RVs and the campers and the four-wheelers? What's going on? What's going on in Gillette when the economy or when oil prices crash?
Basically, from talking to some of the tradesmen that worked on our properties, they actually warned me. They're like, "You have no idea." Just to hit home the point we're talking about, I actually forgot about this. They're like, "You have no idea what it's like in Gillette when this place bottoms out." Like we talked about that battle file. That what's that guy's name
Dallas,
again? I
Dallas,
completely Dallas.
Dallas.
Yeah, Dallas's battle file. We won't go over that again. Listen to another podcast if you want to hear about Dallas's battle file. And basically, he said that it'll just bottom out. And multiple people told me this. And he said, guys will come here, make all this money because they're paying 80, 100,000 a year. They'll buy all these toys. Oil business will bottom out. And then all these toys will be sold to someone else at 50 cents to 25 cents. I mean, at fire sale prices because they have to move. There's no, Gillette's a town that fluctuates between like 15,000 and 30,000, goes up and down. Now, with technology now, as we've talked about before, it's leveled things out. So the booms and busts aren't the greatest. So okay, they found one efficiency in one portion of their business, but it's still not covering over that business is an inefficient business, and it's shown by the local economy going from 15,000 to 30,000, 15,000, and they said it could happen literally in a matter of a few days. Literally, it could bottom out like that. Thousands of jobs cut, and people are out of there. So that's the example of why you do not want to own a business that's a low operating margin business because the turbulence of that business is just it can go up and maybe it's going fine for a while, but at some point turbulence hits and that thing can drop off fast. Whereas an Oracle, it's just steady Eddie. You haven't heard about Oracle in the pandemic? There's no
No,
peep. They're not asking for money. I mean, maybe they
nope.
asked for money, but I'm not sure. Uh, and yeah, that's it, man. Let's roll to unless you have any more thoughts. Let's roll to
Just
cash
one
flow.
last. I just
Oh yeah, go
what
for it.
you kind of said about it's kind of the health of the business or the blood. It's the Gillette oil business or really oil companies, rusty pipelines. They've got like hemophilia. Like they get a little nick. There's a little tiny cut and they're bleeding out. It's a tough business to ride out an economic storm. And then you've got like an old Italian lady who eats salads and gets a bunch of vitamin D. And it's like, man, it's so hard to kill that. Like the flu can't kill her, pandemic can't kill her. Like this old Italian lady that I grew up with on the corner. I mean, she just lived forever. And it was like, yeah, I mean, she ate vegetables and she got a bunch of vitamin D. And that's Oracle. Oracle is just a business that keeps day in and day out, good economy, bad economy, sideways economy. They just keep making free cash flow. They have a high operating margin. They build more servers. They produce great software that just works. It's always running. It's every logistics company in the world basically. They either were a customer of Oracle or they're going to be a customer of Oracle. It's a beautiful business. I'll end it on that, Warner. We can move on.
Thank you for listening to the Red to Black podcast. We really appreciate you taking time out of your day to listen to our podcast. If you would like to connect with us in the future, you can find us on LinkedIn. Simply search for Werner Minchel or Mario Parzino. Also, you can find a link to our LinkedIn profiles in the profile section of the podcast. Thank you again for listening, and we look forward to connecting with you in the future.